All righty, Doc here from North America. Good morning, good afternoon, and good evening. It's so fun to listen to them try to figure out what the market's going to do. If they just watched our webinar every day, they'd have a good idea what the markets are going to do. Excuse me. Anyhow, they're really what did I do? I just pushed. Did I push a wrong button? I might have done that. Let me get rid of that. There we go. I hit something and it blew something up on the screen. Let me just double check the sound. Make sure I'm not. There's just me up there and not some advertisement going on. Let's see. Oh, let me tune in too. I didn't even look at the chat line yet. Ay, ay, ay. All right, there we go. And whoa, that's noisy. And there we go. Let's see if I hear. Okay, there we go. There's Robin. There's George. Good morning, good afternoon, and good evening. Yay. It is Happy to Hump Day, Wednesday. I think I hear an oscillation. That's funny. Let's kill that right there. Anyway, yeah, they're out there talking about. Oh, you know what's interesting is Tech 100 is on the course for having the best first quarter in the last 3 years. Remember, the end of the quarter ends on Friday, so that's pretty cool. Just wants to answer this. Let me just answer that. There we go. All right. Yeah. So, what I see is that it's everything we've talked about here for like the last 2 or 3 years, and then like the last. Hey, Robert, how you doing? And so forth. Thank you. And so, you see the dollar index on J4X is up there right now. And Robert, welcome to our cyber trading pit. You can see the dollar trying to move down. I saw a great story yesterday. I listened to it, and I was thinking about trying to find the article itself. It was from a fellow who is a big banker in Beijing. Okay, he's an American. And he was explaining the same things I've been explaining for a couple years about how the being the world's reserve currency hurts us in America more than helps us. It slows our economy down. It doesn't make it better, and so forth and so on. In other words, and he was saying that he says it's all posturing in Beijing because they know that they could not be the world reserve currency. Now they can nibble on the edges and so forth. But if anybody had it, well, no one wants, in all honesty, no one would want it. It hurts you. It doesn't help you economically. Imagine if, like Janos did those webinars. He did some webinars and videos on fundamentals. Okay. In other words, fundamental economics and how the markets don't trade like they used to fundamental information anymore. They last for minutes versus hours and days. And so, I always mention how it would be wonderful to have a clean, clear. There's Robin. Peachy is cool, and Robert says I'm fine. Excellent. And so, what was I talking about? Oh yeah, the rain in Spain. No, so we would have a clean M1. We'd have a clean M2. Money supply 1. Money supply 2. We'd probably have a clean M3. I understand now with the way it's going, the way it works, you can't even trust all the way up until something like M4 or M5. And we used to live off of M1 and M2. In other words, as traders and fundamentalists and, fundamental analysis. We used to live off those numbers. Those numbers were very important. Now they're close to irrelevant. They're just like, They make no sense anymore. They don't help anymore. It doesn't give you the in other words, the way we measure everything around here, traders, and that's why we're up on there live. And the way we measure everything here is live and history. In other words, you can see our math, goes into the buy, and what product is this right now? There's the currency that will not be named. Okay, so there's the euro, and right there is, let's go to that one. This is the dollar index right there. Okay, and you can see our math. It went into a sell here, and so we're on the hook. It says you're in a sell, Doc. And we got a daily sell here, and it went into the buy. We switched months here, so I'm not sure why. I got to fix that. I meant to fix that yesterday. Just add more data to the back. But we went into the buy way back in here, and it went up. And we go in a sell, it goes down. It doesn't do it perfectly in the beginning, but it plays itself out to the point where we're 85 to 90% accurate all the time. And so when you have that high in accuracy, you just follow the system. You're going to be a winner way, way, way more times than a loser. And when you use what did Robin used to call it? Responsible execution or something like that, or in other words, using protection, like stops during the intraday when you're trading intraday trading, options or binaries when you're trading overnight. In other words, you're not going to get crushed. You lose little and gain a lot, and so that's the answer to the whole thing, and that's where we come from in the sense that when we look at fundamentals. Unfortunately, the numbers don't justify themselves anymore. And it's because we're the world reserve currency, and we have money pouring in, not just for they think things are going up good, or they think they want to get out, and they think things are going to get bad. Money's pouring in because there's no other place to go. And so every time you hear when there's something crazy happening here in the States, and they're rushing towards the bonds, and us traders from the old days look at it and go, are they out of their minds? We're the problem. Why are they putting their money here at the same time? They should be running away from us, not running towards us. And that's what the problem is, that the supply-demand structure is all upside down. And then you go into fantasy land, where central banks across the planet ran negative interest rate games against investors. You bought into their bank, you put money out to buy their bond, and you paid the bank interest at the same time. They didn't pay you interest. So, it's a basic fundamental here. It's got to be real. It's got to have history. It's got to work. And it's not the last 3 hours. It's got to work for the last, 50, 100 years, that type of thing. And so that's what it's all about. But Beijing, what's this? Foster says, what's M1 and M2? M1 is money supply 1. And it's kind of, I think it's checking accounts, savings accounts. It used to be just checking and savings accounts. No, checking accounts. Just checking accounts. Money moving in and out. Then M2 is a combination of checking accounts and savings accounts, because money's kept there and is deriving interest. And then they put interest on checking accounts. And that kind of confused things a little bit. But the banks had to do that to keep depositors. And why did they have to do that? Because they were getting pressure from foreign money parking itself in different places just to be here. In other words, the perfect example of it is, look how many trillions, not billions, not billions with a B, but trillions with a T, not millions, not with an M, over the last 12 years was willing to pay interest and buy bonds at the same time. So in other words, they took money into the European Union and other countries, and Germany in particular, and they would park money there, pay to park their money there, and at the same time, in other words, they bought the bond, and then they paid interest to the government so that they could have that bond. Talk about insanity, okay? It is total insanity. And so when you look at the M1, M2, M3, all the way up to M6, they're looking at different types of deposits and how money is kept, like CDs and duration of time and accessibility when it can it expires, and if you can get out of it partially or you can borrow against it without payment. There's all these mechanical things. The fine print, I guess you would call it. And so that's what the M1 and M2 and M3 and 4 and so forth are, is that the way deposits are kept here in the States in the banks. And as you've seen through Crazyville, the QE, I guess it should be quantitative easing, for the last 15 years, we've seen money being willing to be parked in a place where they don't make any money. They lose money by just parking the money there. And so that all falls back to the world reserve currency situation. In other words, we're pressured from... my first inclination is to say the word stupid money, okay? But it's not stupid money. What they want to do is they want to be guaranteed that they're going to be able to get almost all their money back. And there's no other place on the planet they can do that. And that's the problem. And it's because pretty much everybody else is bankrupt. And, from the collateralized debt obligation disaster that bankrupt the whole financial system in 2008, which created QE. So I hope that makes some sense. Does that make sense? Does anybody see that? Did my story make sense? I just want to make sure it does. So anyway, I see this guy yesterday. He's a banker in Beijing. He's an American. I forget who he's working for. I don't remember which house it was. And he was, trying to remind people again that, don't worry about the dollar. They're just nibbling on the edges, and we would love a weaker dollar in America. And, we would love not to be the world reserve currency because our economy would be better, not worse. So, it's just one more time. I'm going to try to find the fellow's name and find some of the stuff he publishes, and we'll put it up here so you can access it one day. But it's just an example of the we used to call it stupid money, where money it goes into something and it's not really a smart investment, doesn't have a good return, or it has great risk. And that's the way it is at the moment, is that the safest place in the world to put your money is in the United States, which is not very positive for us when it comes to fundamentals and trying to follow the basics of earnings, P&Ls, profit and losses, future growth, trying to understand linearly, approximation of future earnings and growth and expansion. That's the whole ticket there. So anyhow, that is my, as they would say, that is my riff for the day. So you can see there the dollar index is reflecting on J4X right there. You can see the daily. It's working its way down. Same thing over here on Chicago Quant. That's our mathematics there, Robin and I's. And you can see the pressure is on the downside. We use both charts here. This way you can use J4X to at least keep up with the market better than anything else out there. You may not be seeing our work, but at least you're seeing something that's relatively close to being accurate. More relative than MACD and moving averages and all that other stuff and RSIs. This is a fast moving stochastic, the green line. When it breaks underneath and you have a red hinky ASCII bar on there, it shows you that there's weakness. Vice versa, when it breaks through the dashed line, the slow moving stochastic, the fast does, and you get green here, it tells you there's pressure on the upside. In other words, there's value. And then the same thing goes reverse here. You can see here it's trying to turn, and it hasn't been able to turn too well. And we are in our weekly sell. You can see here. The daily sell, we're in a daily sell there for the last 2 days. It's just kind of going sideways, nothing major there. It went into a sell here, went into a buy one day, but we're in the weekly sell, so you can't take the long. That's how our rules work. And then you go back into the sell, and we're in a sell, you can be short. Obviously, it's not winning at the moment. And we live and die by our numbers every day, and every minute, and every hour, and so forth and so on. So, all right, from there, we'll take a look at anything you would like to see, and we're going to drift. We have a normal combination of things we look at every day, but we love to be interrupted. We find it much more enjoyable. And so we go from the dollar index to the euro, and then the cable, and then the Swiss, and then we go look at the yen, and then we move over to the Turkish lira, and then we move back down to the Canadian and the South African rand, and we do the Mexican peso. They're the currencies we look at every day. We can look at other ones if you want to see them. Just put it up on the chat line. And we will stop what we're doing, and we will show you it. because, again, I'm a trader, and so I like adventure. I like action. And so anything that changed my daily routine in the webinar is a positive in my head. Alrighty. So let's take a look at the euro. And there is the euro. You can see right there. It's climbing up into the buy. Did it make it there last night? It looks like it did. It did get into the buy last night, and it's up a little bit higher today. And we are in a weekly buy for 1 full week. We're on the second week now of a weekly buy. So we put a line in here just to remind you that it made it through the zero line here, the green line there, and it closed above it. And that's what we do. And same thing here at the end of that week. We may get, like in this case here, we were kind of moving into the weekly buy very much from this point right there. But we followed the slow moving algo, and then the little blue dashed line there is the fast moving algo. And when these two, this one's above the zero line and this one is above the bottom part of this, what I call a nonlinear time manifold that I invented, then it tells us that there's strength coming. And sure enough, you get your strength and you get a daily buy, you notice strength's coming, and there it is. So Yano says, Doc, any idea on who were the top 10 holders of SVB deposits? I've heard names. Yeah, I've heard names that had a total of about 13 billion. Well, it was a piggy bank for a lot of billionaires, you know. I'll look around for it. It appears that the public bailed out tens of billionaires, exactly, because there was only like 290 billion, 92 billion. Only 7 billion was covered because they were so big a depositors. Matter of fact, I heard something yesterday that made me laugh. They had, I don't remember how many billions it was. They had a bunch of billions of dollars sitting in an account in other bank in the United States. It was like a checking account, and it got no interest, and it was just sitting there. They didn't even have it invested. I mean, this thing was a piggy bank. That's why it got bailed out, because it's a Democrat piggy bank. And so the Democrats, at first Biden didn't realize it. And so they had to like kick him in the pants. And that's why he flew out there the next day, and they bailed them out. And then they refused to sell the bank when they could have sold it that Sunday morning from Friday's collapse. They could have sold the bank, but they wouldn't sell it because it was a Republican who wanted to buy it. So they didn't want anybody to find all the names and so forth. They're all there. I heard them talking about a couple different ones. I understand the governor of California had 3 different bank accounts there. He's the one that kicked Biden in the pants to get him moving. And then Biden jumped on an airplane and showed up out there to apologize, and they made sure to let them all know that the billionaires were going to get their billions back, which they were going to get it either way. It was just a matter of time. So, because it had over 300 billion in assets still. The problem was they were borrowing short-term, selling long-term in interest rates, and so they didn't have as much free capital. They only had like about 160 or 170 billion dollars in free capital they could liquidate, and then the rest was trapped in bond positions that were losing money, and so when they come to maturity, they make money. So they have to wait for them, and that's what the new QE is. Not the new QE, but that's what the Fed is doing now. The Fed is buying those bonds. The Fed bought those bonds at face value, not at mark to market. Okay, the difference between face value is if a bond is sold, then you have when it matures, you get all your money back. That's face value. Yeah. I heard somebody call it. There's a nickname for North Korea, and I heard somebody call it something like North California Korea or something like that, or they put a K in front of California, and it's called North or National Korea or Korea California or something like that. Yeah, I think he's smarter. I have to say, I think Kim Jong is sharper than Newsom. I have to believe that. He had the mindset to actually communicate with Trump and meet with Trump, and so that shows you that the guy knows what the hell's, he knows how to function. Biden is totally clueless. Did you see the crazy that I was talking about yesterday morning with Biden? So there was this shooting. This transgender got nuts and went and shot up a school. The last 4 school shootings have been by transgenders. And so, anyway, they send Biden down to the news, to the Rose Room or something like that, to talk to the reporters about it. He gets down there, and there's like kids sitting there, and all kinds of people down there, and they have a friendly crowd there for him, so he's not going to get in any trouble. And he forgets what he's there for. So he starts talking about chocolate chip ice cream, and he talks about how much he loves chocolate chip ice cream, and how much how much ice cream that he has, and then he wants to invite the kids up to see in his refrigerator how much chocolate chip ice cream he has. He does that for like 4 or 5 minutes, or 3 or 4 minutes, when he was supposed to go down there and basically talk about the shootings. He had a Democratic Republic. I like to call it the People's Republic of California myself. That's what they call the state of New Jersey, the People's Republic of New Jersey. Yeah, the leftists. So anyway, yeah, where are we at? Oh, there's the euro. Yeah, so we're talking euro. No one else is shifting me off to a new place. So anyway, yeah, that's crazy stuff here going on. Crazy. And then we got the debt. The thing is that he's refusing to do anything about the debt ceiling. The debt ceiling blocks out in June. In other words, it's already passed, and they're doing tricks right now, the U.S. Treasury, to keep everything smooth. But he refuses to talk about it, and the House of Representatives, who writes the checks, has told him he's got to negotiate. He keeps on telling him, I'm not negotiating. So, I mean, the guy is out of his mind. Totally crazy kid. He's a crazy kid. Anyway, there is the euro. You can see the strength there. Let's see what the euro looks like on J4X. And there it is right there. You can see the daily doing the same thing as we're doing over here, trying to lift up. You see some green here on the hinkies. And let's take a look at the weekly, see how it matches up. We always think of our math as the primer. It's the key. And then what happens is you look at it, and when you can find other indicators that match up to our work, then you got something that works pretty well. This is only a few hours behind these indicators. That's it, just a few hours. When you're looking at daily and weeklies, that's not that bad. And so, especially if you're using options and binaries, then it's way good. It's very good. All right, now from there, you can see. The matching up and the way it's acting, and the green line has broken to go to the upside, and you got the green here, and that's the weekly, and you can see the same thing going on over here. All right, from there we'll jump over to the cable. Let's see what the Commonwealth is doing this morning. That's like the largest banking, I guess you could say, economic community in the world. That's it doesn't beat the U.S., but it's the second biggest. And then the European Union is the second biggest economy itself in the world. So in other words, you have all those countries in the Commonwealth, including England. So it's a very powerful thing. Like 3 billion people, and an average income of about $14,000 a year, which is $2,000 more than China, and China's only like 2 billion. So I'm always confused why no one screams and shouts about wanting to be invested in the Commonwealth. But they love to be with the communists. Yeah, shake my head. As you can see here, the British pound's been in a daily buy for a bunch of days. It's been in a weekly buy for a couple of weeks. The strength is just marching along, and it keeps on trying to get higher and higher and higher. And looks like they're trying to, let's see if we can tighten this up a little bit more. They're trying to go after new highs. It'd be nice to see them take out this plateau over here and see how they take off up there. We here all the time think that every time the dollar goes into a sell, it's going to go down to 95. That's all I think. It's going down. I just, it's too expensive. I want the dollar to go down in value. It needs to go down. It's overpriced. And so there we are right there. You can see the same thing on cable. GP, the British pound, the Great British Pound against the dollar. You can see on the weekly it's moving up just like it's moving up here. And you can see the green hinkies for the last couple weeks like here. And then on the daily right there, there's the daily. You can see that long push, 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 push. Now what is wrong with that? Why is that doing that? No. Now what is the malfunction? Oh, I guess I have to. That's it right there. Now where's the rest of that? What is going on that it stops? I'm not sure why it's doing that. If I go like that, I think it straightens it out. No, it doesn't straighten it out that way either. I'm not sure what the malfunction is there. Let's see. Let's click on it. I've seen that do that a few times. I think when I hit cancel, and then I shrink this down, and then go back to another chart of another product. Let's go back to say, or let's go to the Swiss real quick, and then go back to the British pound. It'll straighten it out. There's the Swiss. Now let's go back to the pound. There we go. Does that. It's odd the way it does that. So you can see here the green line is pressing through on the daily, just like ours is doing over here. So just confirming everything, making sure you see accurate data. We try to be accurate here. And the only bad thing I do a lot of bad things around here, but I guess the worst is me drinking my tea as I'm doing my webinar. I do sip my tea once in a while, and I'm going to do that right now, so excuse me. Very good. I use one of these Oriental mugs type of things, so it has a little lid, and that's that. All right, from the cable, we'll go over to the Swiss franc again. Right there, you can see the Swiss is trying to bounce up. I really think that they're going to really see this. There's bad news out again this morning. Something about a lot of Swiss banks have been altering accounts to make it look like the people who were American gave up their American citizenship, and so this way they didn't report to whatever reporting thing they do. So that's putting a little squeeze there, you know. I'm sure it'll work its way out as usual. But it supposedly is making things a little nervous this morning, and I guess that's why we're in 3 days of daily buy now. This is the third day. But look at the weekly. You know, the weekly is pressing down. You can see here they are lifting the fast algo on the weekly up through the zero line, but you can see here the slow algo is well underneath the manifold, so I'm not that excited about pressure on the upside on the Swiss, even with the daily buy. It's kind of like a neutral position to begin with a daily buy and a weekly sell, so we'll see how that cleans itself up. They'll obviously pay a fine, get it done, and then go back in the saddle again. We use a lot of cowboy narratives around here. I live in cattle country and I have a farm. So from there we slide over to the yen. And there is the yen. Let's put the yen up on J4X right there. And as you can see here, the yen also, like the Swiss, is in a buy for the last couple of days, but the algorithm is not pressing as much on the weekly, and it's down in the sell still. And you can see over here, let's put the weekly up on there, right there. And you can see that same pressure. It's on the sell side. Green line underneath dashed, red hinky ashkies on the bars. So you can see that pressure pressing it down. No questions anywhere? Oh, and who was it was asking for M1 and M2? Foster, did that make any sense to you? Was that okay? Just throw a K up there or something like that to know if I explained it clear enough for you. Let's see, or a thumbs up or a thumbs down. It doesn't matter. Just any input. I'm here alone. All right. Out here in the WWW, in the World Wide Web, out in cyberspace. The cyber trading pit. All right. From there, we look at the yen, and we saw that. So now what we'll do is we will inch our way over to the Euro Turkish Lira. Right there. There's the Euro Turkish Lira. You see it's battling its way to try to get into the buy. When you have a red and a green dot on here, that's usually a sign of volatility that could get excited and things could get going. This thing is so messed up anymore because of liquidity problems. It never was so illiquid as it is now. Truly disappointing. It's one thing to go from 1 to 20, but now it's illiquid. And it's like, oh man, it was fun to watch when it was liquid. Very predictive. One year we were 54 weeks in a weekly buy. 54 weeks. Another point we were like 28 weeks in a buy. We went into a sell for a couple of weeks and then right back into the buy again. It's been a very fascinating currency to watch. Huh. So that is what it is right there. Now, let's go to, what else can we say about this? I guess nothing else we can say. Just that it climbed into the weekly buy last week. Wasn't a buy when it did it, and then went into the sell for a couple of days, and then went down a little bit, and now it's turning back up again. So we'll put a line in there for tomorrow like that. Chances are it will close in the buy. We'll see. Anything's possible. We can always delete it if it doesn't. There we go. And let's just do a file save to here, right there. All right, from there we smooth over to and move over to the Canadian dollar against the US dollar. And it's been in a sell from here. It's been bouncing around, and you can see the weekly is trying to break down. The fast has broken down just in this last week, and the slow is moving down there pretty quickly also at the same time. Let's put it up on J4X. Well, oh no, what we do over here is that we look at oil. We compare oil to the Canadian because they seem to march together very interestingly, about a 70 some odd % accuracy together, which is a pretty high number. And then we go to the South African Rand and we look at gold. That has something like a 99% accuracy rate until the politics of late. I suppose that there's banking problems going on down there too. Political and banking problems, both, just like the United States. So there it is there, the Canadian still heading down, and now the weekly is trying to get into it. Here it is, happy to hump day. We got a couple more days. And at the same time, you can see over here, light crude is trying to lift up this week. And when we go and look at it on the daily, when we look on the daily right there, you can see a couple days up. So as this thing is moving down, which means it's gaining against the dollar, this thing is moving up. That's the confirmation of it, or like an affirmation or that type of thing. Alrighty. From there, we slide over to the South African Rand, and we're going to put gold up on J4X. Go, 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 go. There it is. You can see it's in a sell for the last couple of days with the line underneath it. It's going sideways up, basically. Matter of fact, we'll just show it to you what it's doing over here. Right there. There's the gold. So went into the sell here, went the wrong way there, now it's coming back right into the right way there. And we're in a weekly buy, so you would never have taken the short anyway. You might have taken well, this one took the profit from the gain from here, so that was cool. But and then it jumped into a buy again, and it was a very poor buy. You know, it was just made, I don't know, 10, 15 bucks in gold. That was it. What was that? The close was 96, and the next day the high was 03, almost 04, 0360. So it was like $8 at best. So just tells you it's trying to run out of steam, and we don't. It's not too surprising now that the banking system seems to be under control. Hey, Metho, volatility, please. Sure. VIX. Break out the VIX. I think it's in a sell for a couple of days at this point. Let's see, where are you, VIX? Not there. Okay, so let's open it up over here. The VIX looks like to me, I think it's been in a sell just from memory because I looked at it last night too. Here it comes. Here it comes. I think Bitcoin will be up there first. There it is. And then there's VIX. Yeah, VIX went into the sell yesterday. And it's in the sell today. No, that was Monday. It went into the sell on Monday. Let's grab this red one over here. So it went into the sell on Monday. And it's not showing live trading at the moment. I'm not sure why that's not doing that. Let's see if we can do something like go pre-market or something like that. Let's get the mousey. And pre-market. Let's see what it does there. There we go. And we were in a weekly sell from last week too. We closed in a weekly sell last week. Pressures on, the VIX, that's another thing. It's just like the M1, M2, M3 money supply stuff. The VIX is not a good indicator anymore about marketplace itself. In other words, everybody was waiting for it to crash. And what did the market do? It turned up. It was trading in the 17s and 18s on the VIX, and next thing you know, the market goes and makes new 6-month highs, that type of thing. Excuse me as I sip my tea. So that is the VIX is a tough indicator to try to follow at this point. It's not accurate enough to trap yourself in anything. You don't want to. And remember, those options over there make it even worse because they're European options. They're not American options, so you can't exercise them. So what makes the VIX? Remember, how do they create a VIX index to begin with? Think about it. They take the at the money call and the put. They take the out of the money call and the put, and then they take the out of the money call and put. Right? So they take those option prices and commingle them together, and they get the VIX. And so that's the VIX index. So it's not a really good tool because they're European options, so that they're not priced for exercising. If you can't exercise, I've mentioned that many a time, if you're trading something that can't be exercised, then they're going to abuse it. They're they're going to distort it. Just like gold. For the simple example, gold. 12-month gold. Next year's gold is trading almost $100 higher because you can't exercise it. 2 years out, it's trading at almost $200 higher. So they can't exercise it, so they allow the real price to slide into it. Whereas in this case here, the front month in gold is only trading, at 2,000 basically, 1,962 as we speak. Now, if they could exercise that thing instantly, then what would happen is gold would have to be higher because people would want to take delivery of gold. You try to buy physical gold and it's much higher. It's more expensive. Silver's in the 30s. But when you look at the futures contract, it trades in the low 20s. So, and the VIX options are the same way. They're European options, not American options, so you can't early exercise them. So when volatility picks up, volatility traders sell the volatility because they know they're not going to get exercised out over a 60-day period or a 40-day period or a 30-day period. And so that's what the problem is. Again, it's basically like the world reserve currency problem. Same thing. All right. How's that, Metho? Good? Or short high? Let's see. Buy low, sell high, or short high. Or on the floor, we used to say buy low, sell high, get high. Remember that, Robin? That's when they always used to say that. Buy low, sell high, get high. All right. From there, I know I'm demented. Sorry, traders. All right, so from there, that's the VIX. Yeah, smiley face. Thank you. I like that. Me likey. Me like Jar Jar Big. Mm. All right. Now from we did see the South African Rand, right? Didn't we? There's the South African Rand. It's moving down, which is telling us in some ways that gold will probably firm up again today. Until that political problem occurred in South Africa, it was clockwork. If you saw the South African Rand dropping and gold was down, it was an easy buy. Because when you bought it, it found a way to get there later in the day. And it was a really nice option trading thing. Of late, it's not as much fun. Because ever since this crazy political problem, the thing has not been following the rules so perfectly. Never. Okay, I'm sorry. Never. You remember the smell of alcohol in the mornings in that trading pit? Robin and I used to trade in the S&P 500 trading pit, in the futures trading pit. The smell of alcohol at 9:30 in the morning was just so rampant. I mean, people were toasty all the time. Not everybody, but a lot. Robin was a responsible floor broker and trader. So he was a local and a top step broker. All right, from there, what do we do over here? Oh, let's just take a look at gold. That's the South African Rand. Let's take a look at gold over here. And there it is right there. So it's trying. Look at that. We're getting a green and a red at the same time. Might see some action kick into this stuff. If the banking system is not folding over, and they seem to have gotten everything kind of under control, then that could be a sign of selling the currencies. I like gold and silver. Problem is that it doesn't like us. With the central banks abusing it, it's like the zero interest rate things and the minus interest rate things. And then when you look at the back month futures contracts, you realize that they're playing with the damn thing. All right. From there, where do we go from there? We go to... We've done gold. We've done silver. Oh, might as well keep on. Oh, we finish off with the Mexican peso. That's what it is. So let's do the Mexican peso. And there it is right there. And it's slipped into that cell. And it's playing with the weekly cell now as we speak. So that pressure is really on now for a bunch of days. And we'll see what they're doing with that. Never saw Robin off course. Never. He was sober in the mornings. He was a true student of the market. Still is, like me. We're students of the market. All right, and then from there, we slide over to... Might as well keep on going with the metal complex. So what we're going to do is we're going to take a look at silver. Let's see what Mr. and Mrs. Silver are doing. And there's silver. It's down a little bit for the day. It's in the daily sell for 3 days. And that weekly is roaring on the upside. And there it is on J4X. Look at that. Green, 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 green. Just like that buy signal there. It was, ooh, up she went. And you see she's trying to roll over. But, you got the green hinkies and... at the same time, it's the line is telling you, just like our line here is telling you that it's in the sell. Problem is it's in a weekly buy, so you don't want to really trade the short at this point. You just don't want to be long at this point, that's all. Let's take a look at it on a weekly basis. Never, right, never. Exactly, Metho. It's only Crazy Doc. That's right. Not Robin. Not him. All right, now from there, you can see here the weekly is pressing up just like it is here. 3 weeks in a buy at the moment. And it's getting at the very top end of the range. We still got some room up there. But they're going to, the whole metals complex in general, they ran towards it, because of the banking problem. And now that the banking problem seems to be under control, was that my title yesterday, I think. Yeah, something about the banks being back in the saddle again, or being back norm. There's only about 3 or 4 regionals that have problems, or maybe they say it could have been as much as 20 some odd banks, out of hundreds and thousands. Yeah. And they've already made it clear what they're doing. They're buying these regionals bonds when they need cash now. They buy them at face value, not how they're trading mark to market. So they have the capital to pay their depositors if they want to move their money to another spot, And when they realize that they don't have to move it, then they don't. All right, from there we go with, there's May silver. We'll go to copper. Right there. Copper's trying to lift up after that sell signal yesterday. We got a red and we got the green there, the red there. We got the weekly trying to rip through, so it's not exactly something you want to be short off of this thing, that's for sure. And it looks like it's going to try to join the buy again from there with the weekly. I heard that they said there was strength in the stock indices this morning because of Asian buying. And in particular, they were talking about Chinese buying. Especially the tech stocks, because yesterday the tech stocks got kind of beat up. They were being sold down. I forget what the rationale was or what people were talking about, but I think we were in a sell for a couple of days, so it wasn't that much of a surprise to me. Matter of fact, let's take a look at it this morning. We're in a weekly buy in the Tech 100, the tech stocks like Microsoft and Intel. And at the same time, we were in a daily sell for a few days. Yeah. So we were in a sell from here. And it's been flirting around. And it's really not. That was it. That was the big drop really out of it all. But we're in that weekly buy. So you're not shorting it. That's for sure. You might have taken a profit up in here and missed all this adventurism. But that's about it. What else can we say about that? That's the Tech 100. Normally we do stock indices later on. But they are mentioning, I'm hearing in a couple different places, that that's the reason why we're seeing more strength today. So from there we go over to, did we look at copper? There's copper, right? We saw that. Oh, we need to put copper up on J4X. That's what it is. There's a weekly on the copper. It's probably green and trying to go. Yep, see, green and it's trying to go. Just matching up to our math right here. Then we go to the daily. Right there. And you see it's breaking down. And in this case here, we went into the sell here, and now we're already right back into the buy-ish area, and we're going to be turning up. There we go. Let's save that just for fun. And for Reese. And then we'll refresh that and save it again before it goes out the door. But I want that line in there. Save. And then save image as copper. There we go. All done. Good. All right, now from there we'll take a look at today Wednesday? Yeah, Wednesday. So let's see what platinum's looking like. I think that's in a sell for the last couple of days. Right there. Yeah, 3 days in a sell. And it has been going down. Closing the weekly buy last week, and it's already having lots of issues with that. It's flirting on the edge. The fast is broken below, and the slow is on an angle towards the down. Either way, it's telling us that this is a short-lived run in the metals complex. If this thing finds a way to close in the weekly buy this week, forget about it. They'll knock the silver and the gold down again. All right. And so from there, we're going to go over to the energies. So let's look at crude oil. In this case here, we'll go right to Brent. There's Brent. And at the same time, you can see it's moving up just like the way front month crude is. We've been in a buy since the 67 area, 68, 65, 67.81. Close there. And you can see here the weekly is joining in very comfortably. And these two are joining together. Just as much as I thought we might get to the 62, we only got down to the 65. When we went into that sell up in here, we were looking for the 62. And then the weekly joined in and we thought, oh, Smacko City. You know, we thought, okay, now we're going to see some 62. But we got the 65 stopped and turned back up again. Now let's look at the back month. You can see the front month is 73.98. Let's see what the back month is. Oop, where'd the mouse go? Let's see. There we go. There we are. So you can see here. Let's see, where is it at? It is. What did I want? I wanted to look at something on this. What was it? Okay, so I know, back month. So front month is 73.95 now. So let's take a look at front month. So 73.97 and back month is 74. So it's almost at parity. There's just like 3 or 4 cent premium, 5 cent premium, something like that. And it's doing the same thing. It's trying to lift up, and you got Brent doing the same thing, trying to lift up. And let's check out the weekly on that. Right there. And it's starting to make its move. Probably with this type of strength, by the end of the day, it should start to turn up. Let's check out West Texas. Right there, light crude. Yep, see, it's turned green already. It's turning green. And this thing's trying to turn up. So we'll see. I think that maybe this is an A, B, C. You know, where's it? Can we look at it better on this? I guess you could say that was like an A, B, or 1, 2, and this could be the A, that could be the B, and that's going to be the C, and then they bring it back up into this area here and stall out in the 78 to 81 area, something like that on a R.N. Elliott type of thing. All right, now from there we go over to nat gas. Right there. I'll put nat gas over here. It's burying itself again. Glad you got out of nat gas, Robin. And at the same time, you can see here, the weekly's burying itself. The weekly here's been in a sell for, a couple of weeks, just like all this red here and there. And on the daily, daily, there it is. Same situation, lots of red. Banging down, bouncing around. It's went into the sell here for this whole move down. Went into the sell for this move down, and then a couple of days of buying, and then right back in the saddle again of sell. Always think of Marty on the Amex. One of the guys I used to trade with a lot, Robin. I remember telling you about him. Marty lived down here, traded on the Amex up in New York. And when I was trading at the New York, I also was a member at the Amex. And Marty would get on the train, and he would fall asleep. And in his sleep, he would say "sold." I mean, he would fall asleep. I mean, he was like gone, and you'd hear "sold." It'd be the train's going, and you hear "sold." And I remember one time out to dinner with him and his wife, and so forth. And I said, does Marty say sold in his sleep at home too? She goes, oh yeah. Sold. He used to trade in he traded in the put pit, which is selling. And then at the same time, he was a specialist for Freddie Mac. So he worked both. He ran the stock of Freddie Mac options. And at the same time, he traded in the index pit too. And he would say sold all the time. Anytime he say something, the first word came out of his mouth is sold. Sold. All right. Anyhow, that's trader lore. All right, let's go from the from the natural gas. We'll go over to, you see that here. Let's look at the Llanos, my favorite stock in Europe, the Spanish oil company. I saw it yesterday trading in the 27s. I was like, no, it's the summer coming up. The spring is here. The equinox. Come on. Lower those prices. Let's see. Where is it at? Let's find that Spanish oil company. Is that it? Nope. There it is. It was 27 yesterday. It's 27 again today. Someone's got to tell them the equinox is here, and they're trading oil and natural gas in the United States at $2.12, not $27. Ugh. I feel so sorry for everybody over there. All right, from there, that pretty much does the energies and the metals. We'll take a quick look at the stock indices, and then I'll go back to trading. So, let's give you the S&P 500 again. Did we even look at it? There it is right there. It's lifting up. Ooh, another new high for the day. I got bull spreads on in there. That was really cool. I rolled them up this morning when it was at 37. At 4,037. It's only 5 points up. So I've got more bull spreads and locked in dinero. And you can see here, we're cleanly through with the fast moving algo and the slow algo. So it's going into the weekly at the same time. So I put on that bull spread. I put it on yesterday, but I widened it. So it actually made money on the downside because I lowered the in the money. And then when it got to a low of like 80 or 79 or something like that, I thought, let's just take the money and run. So I took the money and run and turned it into a bull spread and moved it up. And then it ran up from the 80s. Now I'm long it from the 80s, the 39 80s area. Now it's at 40, 42. So I'm not complaining. But that's the action we see there. And then we looked at, let's just take a look at the intraday work too. Where's the intraday? There's the intraday work. Right there, you can see it's been in a buy. I mean, right through. That's yesterday's close in the United States right there. I mean, it was in a buy then. That's why where was it? I guess it was right here. I covered in this area here. And then it went into the buy right there. And I thought, okay, yeah. Because I traded it down from here. Because it went into the sell there. So then, and now it's just roaring along still, up into the 40s. Keep on climbing, monkey. Go to the top of the tree, get me another banana. And so that's what's going on there. Or bring me down a coconut. All right, so there's the intraday. And you want to see something really short-term intraday right here. It's been in a buy from that spot right there. So it's kind of slow, but it's trying to pop. You can see we're using some volume indicators we've been playing with because of who was that to talk to me about volume? They came into the webinar, talked to me about volume. I started exploring some volume on my intraday chart, and it's really working out well. Can't complain. It's really a good tool. These two indicators are volume average and volume ratio. And they're really good on a short-term basis. Alrighty, so that's the action there. You see it's pushing up. It's in a buy. Whoa, there's another nice pop. Go, monkey, go. Go to the top of the tree. Let's see, how much is the spread making now? Ooh, nice. Thank you. Thank you very much. All right, so now from there we'll go over to the Tech 100. They're saying it's got the best first quarter in 3 years. And they're saying that there's a lot of buying going on in there. And that's where we were looking there. And it's trying to get into is that today? Yeah, that's today. Yeah. So it's just on the edge. It should be popping into the buy. It's still in the weekly buy right here with no problem. So if this thing gets into a daily buy, woohoo! Maybe this thing's going to really roar and the rest of the market's going to roar. And that's like, look at that. It hasn't been this high since September. They're going after highs of September. I guess that's the one right there. So that there is 1368, and that one there was 1382. So it made a new high there, backed off a little bit. Makes sense to me. And then now they may take it up that away, and we're in the weekly buy. So, and if the rest of them join in, they're going to be like buy now, and they'll be talking about selling in May and going away. Remember, we're heading for April, and then May is around the corner. So, all right, traders, we've had enough fun. I hope everybody else did too. This is Doc from North America, Southern New Jersey, saying happy trails to you until we meet again. That'll be tomorrow, Thursday. Happy trails to you, to all our trading friends. Later, later, traders. Oh, I'll put up a title, too. Ta-ta for now. And there's the bell. And the market is off and running. Zoom, 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 zoom.